The day did not break on any single catalyst. The 30-year U.S. Treasury yield pushed to 5.20%, a level last seen on the eve of the 2007 crisis, and the long end kept climbing even as crude eased on Iran diplomacy headlines. That detail matters. When yields rise without an oil shock to blame, the bid is leaving for reasons the curve is not yet willing to name. The S&P 500 and Dow shed roughly 0.5%. The Nasdaq 100 dropped 1.4% for a third straight session, and the entire move sat under the shadow of one print scheduled for after Wednesday's bell. Nvidia options were pricing an 8.65% swing in either direction, which is the market admitting it does not know which way the most owned stock in the world is about to resolve. The setup carried a thread underneath. Bank of America's May Global Fund Manager survey just clocked long global semiconductors at 73%, the most crowded trade in the survey's history. Bank of America's technical desk separately flagged that the Van X Semiconductor ETF closed a second consecutive week with a 14-week RSI above 80, only the fifth such instance since 2012, and now trades roughly 150% above its 200-week moving average, well past the 2021 and 2024 peaks. The same session that lifted long yields to 19-year highs was the session in which positioning in chips reached a level the survey has never previously recorded. The Treasury auction on May 13th had already cleared a 30-year at 5.046%, the first long bond stop above 5% since 2007. CPI then printed 3.8%, PPI 6%, and Fed funds futures repriced the implied probability of a December hike from roughly 20% to 60%. Kevin Warsh was sworn in last week into what economists call the most divided FOMC in 30 years, and the long end has been filling that silence by itself. Somewhere in this tape, the AI rally and the bond rout are still pretending not to know each other.
This is the spine. Long-duration government debt and long-duration equity earning streams are valued off the same discount factor, and the assets the AI trade has lifted hardest, Nvidia, AMD, Micron, SMH itself up roughly 50% year-to-date, are the longest duration cash flows in the index. When the 30-year repriced from a 5.046% auction stop on May 13th to 5.20% on May 20, the discount rate applied to a 2028 hyperscaler capex cycle moved with it. Yet semis did not derate, positioning intensified into the print. That is the contradiction the session left on the table. The mechanism is not subtle. The marginal buyer of the AI trade in 2026 has been a momentum bid that does not need the discount rate to cooperate, while the marginal seller of the long bond is a duration buyer who has decided that 5% does not yet pay for the inflation path PPI just described. Bank of America's Vivek Arya laid out the structural piece. Nvidia has returned only 47% of free cash flow to shareholders since 2022, against the Apple and Microsoft template that broadened those names into income fund hands. The AI leader still depends on a growth fund bid, the bid most sensitive to the discount rate now repricing. Here is where the logic could break. The Cerebras IPO on May 14th priced at $185 with a 20 times oversubscription and opened at $350, hitting $380 intraday on roughly $510 million of trailing revenue, a debut that says the AI primary market is for now indifferent to the long end. Polymarket launched private company contracts this morning, giving SpaceX a 92% chance of being 2026's largest IPO, at a valuation that may clear $2 trillion, and Goldman is reported to be the lead left underwriter, with pricing weeks away. The capital that should be repriced by the bond market is in the venue that prices it first, behaving as if the bond market does not exist. That divergence is what Wednesday night is being asked to resolve. The condition that snaps the explanation is straightforward. If Nvidia's guide for the October quarter slips even into the $83 to $84 billion range that has historically matched its 7 to 8% beat pattern, the 73% crowded long has nowhere to add. The same beat that would have lifted the tape in March now has to clear a hurdle that the bond market raised this week without permission.
The unresolved question from the paradox layer is whether the AI bid can keep ignoring a discount rate that the curve has decided to set without the Fed. The benchmark to watch tonight is therefore not the headline EPS, consensus at $1.76 on $78.67 billion is already priced, but the October quarter guide and any commentary on cash returns. An $83–84 billion guide that lands inside the historical beat band, and a credible signal toward broader capital return would re-recruit the income fund bid that Apple and Microsoft carry. A guide that merely matches consensus, in a tape where 73% of fund managers are already long the trade, leaves the marginal buyer absent at exactly the moment the 30-year is testing whether 5.20% holds. The historical parallel is uncomfortable rather than decisive. The 5 prior weekly RSI above 80 episodes in semis since 2012 did not collapse on the signal. They extended, then topped through a 5-step process: higher volatility, bearish RSI divergence, reversal candles at the highs, a top formation, and a break of the 50-week moving average. None of those 5 conditions are present tonight, which is precisely why the trade is still crowded. The condition for continuation is that Nvidia guides above the implied $83 billion floor, and the 30-year fails to hold 5.20%, which would let the discount rate ease back toward the level the AI cash flows were originally underwritten against. In that path, the Cerebras and SpaceX primary market signals are leading indicators, and the secondary market catches up. The condition for breakdown runs the other way: an Nvidia guide that merely matches, a 30-year that closes the week above 5.20%, and a 14-week RSI that prints its first bearish divergence against price, the first of Siana's 5 tendencies, would mark the topping process beginning rather than the rally extending. The verification benchmarks are concrete: Nvidia's October quarter revenue guide versus the $83 billion threshold, the 30-year auction next month against the 5.046% stop from May 13th, and SMH's 14-week RSI print on Friday's close. If the AI trade can absorb a 19-year high long bond and still take Nvidia to a new high on Thursday, the discount rate channel has stopped working as a break. The question the tape leaves open is the one no chart can answer in advance. What is the level of the 30-year at which the most crowded trade in survey history finally agrees that the cost of duration is its problem too? Every day after the close, we publish a market wrap and key issue analysis. Subscribe to the channel.